Okay, this is the weekend update, weekend analysis video as we head into trading for September 16th on Monday. And we're going to start off with the daily time frames. The total for all of the trades called out in the chat room between the London and the New York session this past week was 414 pips. That's the total profit. There are not any open positions at this point. I prefer to be flat through the weekend. So that is the total of all winning and all losing trades. We didn't have any losing trades this week or last week or this past week and the week before. And so the total for this past week from the 6th to, I believe, what was it, the 12th, that is 414 pips. So it was a little bit slower. I mean, I would have expected maybe more than 500 pips, but that's okay. There was a few things that I'll show you that I was trying to avoid with the euro dollar and the ECB. So right now we're going to start off with the daily time frames, and let's start off with the dollar yen. And the dollar yen, because I've been looking at the dollar yen for quite some time now. For the last few weeks, we've been talking about this over and over again, but it bears repeating over and over again and looking at the consistency of this uptrend and looking for either signs of weakness in this pair, the dollar yen, which would be yen strength at that point, or more continued yen weakness, which means this pair would go even higher. So if we go back, this is the daily time frame again, and I've stripped out all of the information here other than the Fibonacci tool and maybe some extension targets. Actually, let's go ahead and go to this page here. I apologize. I'm going to go ahead and go to the dollar yen page. This is where most of the work has been done on this particular chart in the chat room, and this way it'll be more familiar to you. So based on, this is the daily chart again for the dollar yen, based on the low and the high, the B high, we had two spikes here. Either one of them would have presented an opportunity at just about the same range. The depth of the retracement is what I'm really trying to calculate, because if I can gauge the depth of the retracement by using the Fibonacci tool at the correct A-B price swing, it will then project the extension targets more accurately. If I pick the wrong price swing, sometimes it's going to be off and it's going to be hard to gauge. And then sometimes it's really choppy and there really isn't a solid A-B price swing that you could measure the depth of the retracement, and that could be due to choppy consolidation environments. And then it gets harder to use the extension tool. So in this case, it lent itself really well, the Fibonacci tool, based on the retracements, where the extension targets were. So last week we were talking about the extension target here at 108.00 area. That hit a few times, and then it sort of exceeded a little bit, and then pulled back on Friday. The second target here is 110. So we talk about how likely is it that price is going to go to the 110. Well, it's still likely. It's still possible. We still have this major resistance here from August 1st to deal with. But as far as what these candles show relative to this uptrend right here, I've got no reason to suspect that this is going to turn around. We do have a slightly bearish candle here on Friday, which means a pullback. But what I'm getting at is this trend going to continue to hold, and is 110 still possible? So we know that in an uptrend, eventually it's going to hit an area of resistance, and then it's going to find some kind of a retracement. Not necessarily a completely a change in the trend direction. We're not talking about price going all the way back down to the lows. We could, but at this point, we're not. We're still thinking that it's still likely after some kind of a retracement to continue back to the 110. But how soon does that happen? And that really depends on the daily activity, right? We know that if there's some kind of a tweet from Trump or something about tariffs and China and trade wars and things like that, those things can have an impact. So we've got to be really prepared for that. Again, I know I repeat this quite a bit, but a lot of traders that I know are setting up another monitor in their office when they're trading, just to look at specific tweets as they come across during the day, the trading week, from certain individuals to see if it's going to have an impact. Obviously, Donald Trump would be one of them that you'd follow, and a few other news sources and things like that, and other analysts. But again, if it's that important as far as the tweets, the way the market's reacting, we've got to be prepared for that. So again, we could expect some kind of a pullback and move along the way. But right now at this point, I don't really, unless I go down to a 30-minute or 1-hour chart, see any opportunity to take this any higher. It may be that this could be, let's say, a top for the next few days or 2 or 3 days. Maybe for the week, maybe we could see a retracement. It's really difficult to say. It's not uncommon, of course, to see price come back down and test the level that it broke out of and then bounce. So again, while we still expect it to go to 110, which is a possibility, until something dramatic changes here on this time frame, the daily time frame, something that would indicate that this isn't going to go any higher, then I'll gladly change my position and my opinion on it. But for right now, again, I just see a pullback. And that pullback might be sufficient. It might be enough for us to trade it on the 1 hour time frame. So here, if we go to the 1 hour time frame dollar yen, I've got this the low and the high. There was a price swing low. This is appropriate. This is 108.25 and 107.50. So we're looking at about 75 pip range from the high to the low. And that's sufficient for me for a continuation breakout trade. Now, I don't know if price moves back up and let's say retests last week high, if it then prints a reversal candle, if I'll be trading that, possibly. I don't think I'll be trading it off the first candle on the first hour or two when the market opens, but it's a possibility. Or if it looks a little bit too choppy and things look suspicious and I don't want to trade it, the next option for me, the way I trade with my trading system, is to wait for a candle to close outside of this consolidation range, printing a continuation breakout trade, and then I could trade it a lot lower. And again, on the daily time frame, it's just going to look like a pullback, but this might give us an opportunity to trade some kind of a breakout to the downside for 55 pips. The other option is, and we did this a couple of times last week, we had a Tech 1 trade up inside of consolidation at resistance. We traded it to the psychological level targets that we trade to, and then later we had a continuation breakout trade, which then continued lower. That's just a possibility there. So let's go back to the daily time frames. We'll take a look at the euro dollar. Euro dollar, again, sort of stuck in an interesting range, and the pattern after last week's ECB when it retested that low and bounced, it moved up for the day and then sold off quite a bit. I don't know if there's going to be continued movement. It looks at the moment like there could be continued movement to the upside on the euro dollar. That's a possibility. As far as how far it goes, this is a pattern that looks very, very similar to me that I developed and I trade. It's called the T2 pattern. And basically we're looking at the price swings and the price structure and divergence in the indicators. You don't see any indicators here, but I use another template for reversals. And I'm also using the Bollinger Bands. And this, normally, if this was a T2 pattern, a T2 trade, the price target is the price swing high that creates it initially. So it would be all the way back up here to about, I believe that's 1160 area. We were talking about this in the chat room last week. Yeah, 1160 area right there. So that's a possibility. Again, I don't think it's going to come back down, but I'll certainly change my mind again if Monday prints a bearish candle and then it looks like it's just going to remain inside of that range, and we'll look for opportunities, short-term opportunities. Otherwise, there could be a bounce and it could retest maybe the highs from last week. That's a possibility, but I'm not really too sure yet. It looks a little suspicious to me, so I'll be really careful on the open with the euro dollar. Pound dollar is interesting though. The pound dollar, I still believe that the pound dollar can go a lot further. So we were looking at the pound dollar and it looked like this last week. We'll go to the pound dollar chart where I spend most of my time analyzing. So again, I go back to certain pages that I spend more time analyzing the charts on specific time frames. So you'll see more detail, more of the technical work that I do on the chart. So I want to go back to that chart so that everybody's familiar with it because we talk about this in the chat room. So we had an A low, a B high, and a retracement. It didn't really hit the 382. And it took off. It went pretty strong for the day. The first target, if we could expect, based on the depth of the retracement, price to continue, which looks like it'll probably continue on Monday or Tuesday at this point, is the first target would be 1.2590 or 1.26 area. And then beyond that, if it goes any higher, this would be one of the other targets at the 1.3000 level. So these are possibilities if price continues. It is somewhat expected by a certain group of analysts that price here on the pound dollar could go higher. So again, be prepared during the week for Brexit comments and tweets about Brexit. That could cause an initial spike 180 degrees the opposite direction of what you're trading. And if you're using a really tight stop, be prepared. If you're not using a stop at all, it's probably going to scare you when you see it drop really quick, if it happens, and if it's against your position, and you may not know what to do with it at that point. So you've got to find some key support and resistance levels on the 30-minute or 15-minute or whatever time frame you trade. I trade off of a 30-minute and a 1 hour chart. And you've got to identify some key support levels where you can draw sort of a line in the sand and say, that's it. If it goes below that by, let's say, 10 or 15 pips, that's when you would close out the trade. So this is the 1 hour time frame, and we had a breakout towards the end of the week last week. At this point, when it settled after the rollover and during the New York session, it didn't look like it was going to go all that far. So from the high, the spike high in the morning, that high was 74, and it topped out there at 0.4. So it went about 25 more extra pips approximately 20 to 25 more pips. And I usually stay out of the market the last few hours. I don't want to get stuck in a trade like this. So I avoid looking at the charts altogether because I don't want to hold a position through the weekend. Many times, and if you've been trading for a while, you know what happens or can happen when you hold through the weekend and something unexpected because somebody made a comment and it creates a huge gap. And some brokers don't honor those stops if you put a stop before the market closes, and it'll skip right over it. And sometimes you can lose quite a bit, or I've seen some people experience margin calls with that, and I'm not going to risk mine or my subscribers' accounts like that. So I try to stay flat, even if it looks like there's a little bit of a rally in the last couple of hours. I try to stay flat at that point. This is the pound yen, and we've traded the pound yen a few times. Last week we traded the pound dollar and the pound yen at the same time because they were, creating some movement earlier in the week, and then it sort of stopped, and then we saw more activity with the euro dollar, and the pound dollar was going sideways, and the pound dollar was more or less reacting just because of the anticipation of ECB. And then eventually we got both of them to start moving. And then after that, you get past the ECB, and then you see this one opening up. This is a pound yen, and it's, for the most part, tracking what the pound dollar is doing here. So we've got that A low, B high. Not too much of a retracement. We've got our first target here, which it's pretty close to, at the 135.60 area, or 50. And then the final target up here, all the way back up to the 141.00 area. These are just some possibilities if it continues a lot higher. Again, at this point, it is expected that the pound dollar is going to go higher, but I'm not saying buy right out the open. Again, I wait for confirmation. I look for opportunities. So if I was to go down to, let's say, the 1 hour chart and look at the pound dollar and the pound yen, let's start with the pound yen. I wouldn't buy on the open, even though it might work. I would wait for some kind of a retracement, maybe to a level that it broke out of, some kind of previous resistance that could then act as support, maybe that small support level here and then a bounce. That would be something that I would prefer to do instead of just jumping in here and using a stop that's, quite large at that point. We got to be careful with this one. Same thing here with the pound dollar. This is the 1 hour time frame. So the pound dollar, depending on where it ended up, you got to be really careful with it. So these are actually some of the trades. Again, I mentioned that we've had some really good opportunities with the pound earlier in the week, and then later in the week, and then with the pound yen, and then things went sideways for a little while, and then we got some activity with the euro dollar just before ECB as it was dropping here. This was another trade opportunity for us. And then we also traded ECB. Now, sometimes with these reversals, I'm pretty suspicious about some of these reversals. Some of these reversals can be a trick in itself. Sometimes they can go back to the level that it broke out of. All kinds of things can go wrong with this at this point. So you got to be really careful with it. And then, so we managed this position really well. I'll show you the euro yen, which was actually a better example of managing the initial spike with ECB and the rate statement, and then the press conference, and then the reversal with the press conference afterwards. So you can see you get the interest rate decision for the first hour or so, and then 45 minutes later you get the reaction afterwards with the statement, and anything can happen there, right? I mean, he can get, and I've seen it with Trichet, and as long as they continue to go through this all the way back, I've traded FOMC, I've traded interest rate hikes since 2001, cuts, rates, all of it, speculation, everything, and they're sort of scouring through all of the information that they can find on the internet, and then they're also going through the statements, and they're reading specific words and phrases, and if one sentence is omitted, it can cause a reaction. There's so many different things that can go wrong here. You really have to be careful. You've got to be on protection mode when you get in a situation like that, because if you don't know the implications of what they're saying, these key words or what the market's looking for, you may just be trading what you see as far as price moving, and that isn't always a good idea. Sometimes it works, and sometimes it doesn't if you get caught off guard. Again, and then we had a short-term opportunity here just before the market closed. Let me show you the the euro yen before I go. We'll go back over here. This was the euro yen, and we had a continuation breakout trade here with ECB and the rate decision, and then the statement, the press conference. So we were in protection mode. For a while, we thought that price was going to go a lot lower, maybe down to the 117, but we could clearly see at one point that it wasn't closing below the week's low. And then that's when the euro dollar bounced right off of that 2-week low and turned around and reversed. So at that point, I was able to lock in profits and tell everybody in the chat room, this probably isn't going to go any lower. Like we were short at this point. We need to lock in the profits that we have. So we were able to earn 27 pips on this trade here. And then, of course, we've got some protection measures. At one point, we scale out at different levels. If it works and it closes and it continues, and what Mario Draghi was going to say was going to continue to support the euro and the euro yen in this case moving lower, then we had a target that was a lot lower at the 116.60. These were just possibilities. It really depended at that point on what he said and what his agenda was. And so we talk about this quite a bit in the chat room, that when you see events like this, very often banks have their own agenda. We don't always know, but you can see it sometimes with some of these price levels, clearly defending this 1.0925 level. You can see all week long from the previous week, and then it drops right there with the initial statement. They know the reaction of what their statements are usually going to cause. They know the reaction that it's going to cause. And at that point, it was a matter of just timing the press conference and the things that he said to stop price and have it reverse and go back up the opposite direction. And clearly far away from it, like defending this level. So the way I was talking about it in the chat room was my first experience back in 2001 with bank interventions. It's initially when you don't understand the implications, you don't understand what it is that they're saying and how it can have an impact. And you don't know when the banks are necessarily going to step in. Banks can step in, not necessarily financially stepping in, but just making comments to defend certain levels. So the Bank of Japan was always intervening back when I first started trading. And it was a new experience for me. And I remember trading, it was either Thanksgiving or Christmas, right around that time. And I had an open position, and the Bank of Japan had intervened at that point. And I didn't know what was happening, and I was losing money fast, like it was reversing quickly, and I didn't understand what was going on, and I unfortunately didn't have a stop loss, and I was also trading standards. So when you're trading standards, standard lots, you're seeing your money disappear quickly. So it was a learning experience, and I really needed to stop that behavior where I would be trading around opportunities or situations where banks would step in at certain levels and try to defend these. We saw the same thing with the Swiss years ago. FXCM had to borrow $325 million, it was reported, because of the positions they had. When the Bank of the Swiss National Bank stepped in, everybody knows what happened there, and people didn't want to trade the dollar Swiss for a long time. Again, you've got to be aware of when and the timing for the most part, and you're going to do your best guess, but you've got to be able to protect yourself, because a move like this can wipe you out and put you out of business if you're not prepared for it. In other words, blow up your trading account and you're done for until you fund it again. So again, not only are we earning money on the initial moves, but we're also protecting ourselves at this point in time and trying to determine what exactly is going on. And again, when we saw this bottom here in the euro dollar and then the statement, the press conference, it was clear this one was not, the euro yen wasn't going to go any lower, and it was time to protect and lock in profits. So again, one can help with the other. And then, of course, when we trade the yen, we also trade yen futures. I do. And I'm looking at yen futures. This is my yen futures chart, and we're going to look at the daily time frame. So when you see price moving lower, it is yen weakness. And when you see price moving up, it's yen strength. That's it. This is not a currency cross pair. This is real futures volume here. These are contracts that are traded. It is not like trading Forex on the MetaTrader platform. You're going to get a lot more depth and transparency here with the overall strength and weakness of some of these breakouts and reversals. And this is the daily time frame. And for the last few weeks, for many of you that have been in the chat room and have seen me review this, we talk about the 3 pushes to a high. We had a continuation breakout trade. That allowed us to trade it, the dollar yen, to the upside all throughout last week and make some really good money with those opportunities. Here, we're seeing a gap on the open, and this could probably signal what I was talking about. If price moves up, that's yen strength. So this is what I was talking about here. I'm going to go back to the dollar yen. So at this point, we would see the dollar yen move back down again. So again, I mentioned that eventually it's going to top out. We can look for opportunities. We can go to the 1 hour time frame and either look for a Tech 1 trade off of resistance to sell it, or wait for the continuation breakout trade below support and trade it back down. That would sort of support what I see at this moment. Remember, my opinion can change with just a few candles, maybe on the 4 hour or the daily time frame, or even the 1 hour chart. But I need that confirmation. And until I get that confirmation, I have to leave things as they are, expecting the trend to resume until something shifts.